All right, so I'm a little sick, but I wanted to record this anyway. So one of the big things, you would look at trades like this and eliminating the fact that there's a level here. One of the questions is like, how do we notice when what's called a change of structure or break of structure happens? And reversal is just another way to say that. So zooming in here a little bit more, we're watching the 5 minute. Notice what we see here. So we look at the day and we look at this will be the first hour, a little bit more than an hour. Clear uptrend. Higher highs, higher highs, higher highs, higher highs. Dips down a little bit, but still maintaining, a solid trend line, making higher highs again. Now, what do you see? Now, here's the important thing. What you don't see is a real deep break below the previous high. So here's an example. See how here we have this area where it pulls down, and it could be a consolidation or it could be a reversal. Well, the big difference is if we go back a little further, we can see that the level it's coming out of, this range, sorry, Thinkorswim is really a piece of you-know-what sometimes. Am I still on the same day? So let's try this again. Sorry, I really do not like Thinkorswim for charting. I only use it because I trade with them because TD has some of the best fills. So we have this clear upward trend. We have this area right here where we can see that it pulls down a bit, right? Like, what is it doing? Is it a potential reversal? The important thing to notice is we seem to consolidate in this area and we don't break too far below. And what I mean by break too far below, stay out every time we make a high, we stay above a certain range. Like this candle closes, and we don't, as we move up and through, we do not close below that. This is the first time we have closes below this candle. So close above, close above, close above, close above, each move up. That's typically what people would call a bull flag. Now, oftentimes you will have a little bit of a pullback, and it's pretty darn close. So if we were to use this candle, obviously we have a couple of closes below. If we were to use this candle, which wouldn't be as accurate, nothing closes below. So, but this isn't a bad level. I'm going to try this one more time. So apologies, a little bit sick, but I wanted to share this when we talk about break of structure. So when you look at this, what do you see? You see clear trend up, a little bit of consolidation, but it doesn't break below this candle. Then it continues to move, a little bit more of a consolidation, another move up, a few more candles. This could be bearish, but what you don't see is a break below this last level. So here's this last level where you have this bit of consolidation. You don't see it come anywhere near that, right? I mean, look at even the bottom of those candles. It doesn't touch that area. And that's really what you want to see. How far does it pull back? Does it pull back and start to retest what was previously that high that we now broke through? Because each level is like a small high. We have a little bit of a high here, we break through it. We have a bit of a high here, we break through it. We have a bit of a high here, we break through it. We want to make sure we're not retesting and rejecting, pushing back through what was that last high in this continuation. Now here we see on this next level, and I'm going to remove this drawing so it's not confusing in terms of levels. So we have this pull up, great continuation, and then what happens? Forgetting the candle for a minute, because you could say this candle looks similar. Forgetting the candle, what do we see? Okay, so even if we pull all the way back down to this high, or we pull back down to this high, we could choose either one, depending on how conservative you want to be. And honestly, there's nothing wrong with waiting to confirm how big of a move this is. I actually like waiting for this trend line or this last higher high. And the reason is not just because we're at a key level here with this Fibonacci, but because as we pull down, what could happen is we bounce and we continue to move. What you see here is, just in case you're wondering, this is a 9 EMA, the 21, and the VWAP. What do you see? This VWAP is all the way down here, right? So oftentimes traders will look at the 9 to 21 and the EMA and the VWAP as an area for support or resistance, depending on the direction, to determine whether the trade's going to continue. Like look at the 9 EMA as an example. In a strong upward trend, the candles do not close below the 9 EMA. Then there's very little wick below the 9 EMA. It holds strong. Then you start to see this consolidation. Now it's possible that this consolidation could be a continuation, but what we start to see is continuous lower highs. We start to see this level being rejected, right? Like continuously coming up and rejecting this level and rejecting this level. We don't want to go higher, but that doesn't mean you want to enter right away, because what could happen is a little consolidation or break up. There's no need to rush. An ideal move is one of two. It breaks above this area where clearly there's been a little bit of resistance, breaks above it, retest and goes, great, you get in at the retest, right? It's all about confidence in trades. It breaks below, retests and goes below. Now, it's a perfect setup to just wait. Comes all the way back down. You could enter up here, but comes all the way back down. Clearly breaks below what was a clear previous high, breaks below it, comes back up. This is the candle where it breaks below, clearly comes back up and retests, and then shoots straight down. Here's why I like this. And the way I always talk about it is like, look for the second move. And the reason is, let's run through it for a second. So let's say you see multiple candles here. You really like this red candle, or this, like, let's say you really like this red candle. I'm going to enter on this candle. You get in here, and then what happens? It starts to pull up against you. You panic a little bit. The contracts are going down. This could just be a bull flag. Now you're shaken out of the trade just because you entered early. This is the first part of the move. The first move down, retest, and then the go. I look at this entire thing as a first move. The first move is going to be below what for me was a clear higher, previous higher high. Down below that, retest, and then it goes down. The reason is because I enter on the retest. You may enter anywhere around here, and you could say, yes, you entered on the retest, but most likely, most of us won't. We're going to enter on one of these red candles thinking we're going to continue to go down. If you don't time it perfectly with this specific candle, you may get shaken out of your trade, either emotionally or if you have a really tight stop loss. Whereas I wait. And really, we're only looking at losing 398.17 down to 397.25. Yes, it's almost $1, but I'm fine with that. And here's why: because when I'm not sure yet the direction it's going to go, my position size is going to be smaller. So I'm only going to enter a few contracts here, and maybe I add down here. Whereas I can just add down here. I can just wait when there's a clear previous higher high that I want to see it break for a clear break in structure. So breaks below, I enter here, and it's never going to go red on me, because as soon as it retests and rejects, I'm in. This candle, I can either enter here, or I can enter once that candle closes. If you really want to wait for a candle close, clearly below, candle closes, I enter here, and I'm never going to be in the red on this trade. And now I can hold longer, even during this pull up right here, which, look at it, it's a potential little bit of a consolidation before another move down. See, 9 EMA, yes, it moves above, but it's not breaking up all the way back towards the 20, 21 or VWAP, 21 EMA or VWAP. So I look at those and say, how far are we from those? Are we going to reject? How's this next candle perform? If this candle would have broken above up there at 21, I would have watched to potentially get out. But I still think, based on what I'm seeing here, that this is a clear downtrend for the day. And my price target would be all the way back down to around the open, around this 394 area. Also knowing that with this being the 50% fib, it's a key level for support. So I enter here somewhere, let's say I get in a little late at 397, and my price target is at 394.34. I get out. I typically get out early, knowing that there will be some consolidation around there. Like you can see, yes, it blew through, but see how it bounced off at this key level? What I will typically do is when I know there's a key price target, I'm going to get out about 50 cents before, because I'm going to get volume, get out here, and my price will be better than if I hold. Obviously, if I hold and it pulls back, but if I hold and then I wait for this candle and to approach this level again, because it's going to have lower volume, my options contracts are going to move a little bit less. So break-in structure, pretty simple. We have the higher high, higher high, higher high, higher high met by lower high. When we have this clear lower high, I am not entering yet. I am still waiting for clear signal and direction. I'm waiting for that previous higher high to be broken and retested, and then I enter the trade. So it's just a trend that gets broken. Now, you could look at this and say, Dave, why not enter when this trend gets broken? This trend line gets broken, breaks below, retests and goes. It is something I've tried in the past. The reason I don't do that anymore is because while this is a clear and aggressive breakdown, what you'll often find is, and unfortunately this tool isn't that great, what you'll often find is you'll have, come on, there we go. So you'll have this higher high. Come on. And then instead of the next being all the way down here, a clear higher low, it'll come down, hit this area, and then the next, and then it might double top, or it might be slightly lower. And it's a little bit slower of a move, right? And if that happens, if it pulls down, pulls back up, we might just be retesting this area, like support, resistance, pulls back below what might be a key area of resistance, pulls back above, retest and goes. So I've seen it pull above, pull below, pull above, retest and go. This is all about probability and confidence. I would rather wait for a higher conviction trade than jump in too early and get stopped out. Delete should work, but Thinkorswim kind of stinks. If you still have any questions, let me know. I'm happy to run through other examples for you. But remember, change of structure, break of structure, really be patient, clearly identify what were previous, not what I wanted to do, I hit remove, what were previous higher highs, right? Have those levels, rejects it, breaks through, turns it into support, has this key level, breaks through, has this key level, which was your higher high was obviously up here, but then it starts to reject this level. So I see once it starts to reject this multiple times, that's when I have this price level that I enter, because I'm like, okay, this is a key indicator now in terms of the direction we're going to go. We're either going to clearly hold below this, or we're going to break above and go. And I'm not as concerned with this trend line. We've clearly broken it, but I'm not as concerned with this trend line. I'm just paying attention. And as you can see, one more note. Say we have this higher high that we reject, and this initial higher high that we reject. Look how it comes back up and retested. It's a great tool for staying in trades later. So this is one way you can use the 9 or 21. You have this previous higher high in the morning, that it comes back up and rejects to a T. So if it was to break through this first higher high, you know to get out of the trade. If it rejects it, you're able to stay in it longer. And that's why watching fewer symbols is really important, because imagine trying to do this across 4 or 5 symbols. It's really impossible to have this level of attention to detail. So watching 1 or 2 symbols, it's okay if you miss trades. It's okay if you miss trades in a day. It's better to miss trades than to poorly execute, 3 or 4. This is SPY. I will typically watch SPY or QQQ if I really like setups, and then I'll go through a couple of other examples of how I like to trade the mega caps shortly. So if you have any questions, drop a comment below, and happy to answer any direct one-on-one questions related to reviewing and identifying break of structure. I want to focus on this one. And obviously, if there's anything else that you're interested in, like how did I have this original supply zone above, then I'll run through that in another video. But if that's something you're really interested in, let me know, and I can prioritize that over something else that I have in the queue.